皆さん、こんにちは。楽天証券資産作り研究所ファンドアナリストの篠田翔子です。本日は、楽天証券の様々なセミナーやコンテンツでご紹介をさせていただいております、iTrustインド株式についてたっぷり掘り下げていきたいと思います。こちらはですね、僭越ながら私の新刊でも、実はNISA で買える投資信託、おすすめ投資信託としてご紹介をさせていただいております。本日はロンドンから、プラシャント小谷様をお招きして、インド株式市場についてたっぷりとお話を伺っていきたいと思います。それでは始めさせていただきます。So welcome to our show today. As a nice break, can you tell me a little bit about how you're looking at the Indian equity market, as Japanese investors are now really interested in investing in the equity market?
Sure. Thank you very much first for inviting me here. It's my pleasure to be here and talk to you and your investors. About the Indian equity markets, we think it's a very exciting space to look at. We think it is probably once in a lifetime opportunity for investors to consider. Because the next 20 years for India are going to be really bright. And the Indian economy is going to expand a lot. And through that phase, the Indian corporates are going to increase their profits a lot. And that's how Indian investors, the investors in Indian equities will make a lot of returns in the next 2 decades. So I think it's a very exciting story that everybody should consider as a core part of their asset allocation globally.
Okay. The Japanese investors normally invest through a tax-exempt account called NISA. And there are 2 pillars in NISA. One is the monthly investment type, monthly savings type NISA. And iTrust Indian Equity is eligible in that monthly savings account as well. So do you think the long-term investment in the Indian equity market is really good for the Japanese investors as well?
Yes, I think it is. So it is very similar to the systematic investment plans of India, wherein the Indian retail investors are also putting in monthly amounts into equity mutual funds in India. So very similar setup. And that is how the investors have actually learned how to manage the market volatility, because they're always averaging their cost up and down. And this is the beauty of this monthly investment, that you're not really too much worried about markets going up or down. If they're going down, you're probably getting more for your money. If they're going up, you are making returns. I think this is a brilliant way to invest into Indian equities through the NISA program. And if you were to look forward, if you are getting in the market now, India is about $4 trillion economy today. It's the 5th largest economy in the world. Over the next 10 years, or even less than that, it will become the 3rd largest economy in the world. So it is going to grow a lot. And so this is the right time for investors to be looking into India and considering investments today.
I see. So do people in India also invest by the monthly savings type of investment?
Yeah, it is huge actually. So what we see now is that on every month basis, about $2.5 billion of money is getting invested into Indian equity mutual funds through these monthly schemes. So it has become a very powerful force by which the investors are saving money as well as investing money. And that is also providing capital for the growth of the economy.
I see. I asked this question simply because some of the investors are quite worried about the valuation of the current Indian equity market, whether it's highly valued or not. How do you see from this point?
Okay, so the valuations are definitely higher than where they used to be. So versus the historical averages, Indian markets are trading roughly 15 to 20% higher on multiples. So that is certainly a concern out there. But we have to see it in the backdrop of what the corporates are also doing. So last 4 years, we have seen that the corporates in India have grown their profits almost 100%. So they've doubled their profits. And that is happening both by the top line growth as well as by higher margin growth. So we believe that the valuations are not just because of flows which are happening, but actually they are supported by the fundamentals also, which have improved considerably. And therefore, we don't think that there is a large downside to the valuations today. But having said that, they also say that there's no big upside to the valuations either. Okay. And secondly, now that the margins have already gone up a lot, I don't think there is a lot of room for margins to also expand from here on. So the way to look forward to is that Indian economy should roughly grow around a 12-13% type of nominal growth,
Okay.
Similar would be the top line growth for the Indian corporates. And similar should be the bottom line growth as well, because we're not expecting margin expansion, right? So if the valuations were to sustain at these levels, you can still expect to make roughly a low teens type of returns from the Indian equity markets.
Okay. Thank you. Do you have the slides or the explanation that you...
So the valuations,
or
no.
Or can I ask you a little bit about the ROEs of the companies and also in the Indian equity market as well?
Sure. So that is one feature on which Indian companies actually score pretty well. I'll just show you a slide here to help you understand that. Yeah. So historically, if you were to look at, Indian companies have generated returns on equity which are much superior to their counterparts in the rest of the emerging world. And why that happens is very interesting to understand. The corporates in India are very disciplined. So they are very frugal in terms of their cost parameters. They're very conscious about how they're allocating capital. So they're not taking up new projects or new assignments just because it will give them top line growth. They're taking up any opportunities only when it becomes profitable as well. And that is why you see that consistently Indian companies have generated higher returns on equity. And we believe that this is one of the strongest parameter to look at when looking at India, because it is the return on equity which drives the returns from equity. Okay, it is not growth. It is not how much top line growth you're having. It is essentially the return on equity that the companies make, which in turn provides you the wealth creation that the equity investors make from any business.
Okay. Are there any specific sectors that are contributing to this high ROEs in the current market?
Okay. So there are 3-4 very important sectors where we are seeing that the companies are able to kind of tap upon the Indian growth opportunity and thereby also produce great returns in their businesses. Okay. And these are the 4 opportunities that we generally discuss. One is the financial side of things, other is the healthcare, the third is IT services, and the 4th is the consumer internet economy. Okay. So these are the 4 areas where we see that the companies are able to consistently deliver high returns because of different competitive advantages that they have, often in terms of distribution strengths or in terms of their understanding of the customers. Through that, they're able to win the customers, but also have a very sustainable business model by which they're able to sustain those returns over a long period of time.
I see. So when I look at these 4 sectors that you mentioned, the retail financial business service looks quite interesting. Can you give me some examples of the company and also maybe the service?
Sure. Yeah. So the interesting thing which is happening in India is that there is a financialization of savings happening. So if you were to go back like 20-30 years, Indians have always been big savers, but most of those savings were getting into either gold or land or maybe just under the mattress. Right? So all of that was very unproductive. But what has changed in the last 20 years is that Indians are saving much more in financial instruments. So these are things like bank deposits, mutual funds, insurance, pension funds. So all of that is much more productive way of saving, because then it gets into the real economy in terms of capital creation as well. Okay. And even you can see these numbers, how the numbers have really multiplied over the last 15 years. But even now the penetration levels are low. Like life insurance penetration in India is still much lower than rest of the countries out there. And therefore, we think that there is still a huge runway for growth available for the good companies in these sectors. I mean, one example we have here is SBI Life. Okay, so this is a very large life insurance company of India. They are actually owned by the largest bank of India, State Bank of India. They have like 23,000 branches, the parent bank. Okay. And this life insurance company is riding on that network because they're penetrating through that customer base very effectively. Now think about the numbers here. SBI has 500 million customers. Okay. There's like a multiple of Japan's population. Okay. That's the customer base of SBI there. And SBI Life has only 10 million customers. That's just 2% of their customer base that they have penetrated so far, which means that 98% is still left for them to cover in the next, whatever, maybe it will take 10, 20, 30 years. But that's the type of growth runway that this company has got. Okay. And they're doing it very effectively, very well, generating returns on equity, which are more than 20%. and always gaining market share as well. Okay, so this is a company that we invested in the last 7 years. It has really done well for us and any investor into it.
Can I ask a simple question about the financial service? Do people access these life insurance and other financial products by internet or they visit branches?
Okay, so there are 3 important channels for life insurance distribution in India. One is the bank insurance. So essentially, when people are visiting branches, then the bank manager or the bank employee would advise them on which life insurance policy to choose. So that's very important channel. Second important channel is the agency network. So there's these individual agents who would approach people based on their own personal relationships and sell them policies and get a commission from the insurance company on the other side. And the third channel, which is emerging, is the online channel. Okay, that is still a smaller proportion, maybe about 5-10% only of the overall insurance sales happening in India. But that is obviously growing faster because people are turning to online channels much more and are able to kind of buy directly through these channels, sometimes through the websites of the companies or sometimes through the insurance comparison type of websites.
I see. So that might connect to the other pillar that you mentioned, the internet as well?
Yeah.
The internet economy.
Yeah, so the internet economy. So the interesting thing in the internet side is that India is a bit late to this party. And that has happened because the smartphone penetration is not very high in India. Only about half of the population has a smartphone. And even within that, people are still used to the old ways of doing things, like going to a shop or going to an agent to do their transaction. So it's a bit of a habit change which needs to happen, but that is happening at a fast pace. Like we have seen in almost every other country in the world, this change is surely going to happen in India as well. And that is why I think that with there's this report by Bain estimates suggesting that the internet economy, which is $175 billion today, it is supposed to reach about $1 trillion by the end of this decade. So there is huge growth happening, about 20-25% CAGR for the next 7 years. And so the companies, though they are small today, we can already see that there are some companies who are becoming dominant in their fields, and therefore they should be able to ride on this scale up as it happens. One great example that we have got here is Make My Trip. Now, this is the largest online travel booking site for Indians. Okay. This is like a booking.com or Expedia. Okay. And the amazing thing about this company, they have been in existence for the last 20 years. Okay. And they have 50% plus market share in flight bookings, in hotel bookings, and in bus bookings. Okay. So they are dominant across the board when it comes to anything related to travel. Okay. And when we, this business obviously suffered when there was COVID. There was no travel happening. So the business kind of went down to zero almost. There was zero revenues for them. But the management took great steps to cut down cost in their business. And this is what we saw as an opportunity because the rest of the market was focused upon, okay, the revenues are going down. We don't know when the business will come back. The company is making losses. But what we saw is that management taking great steps to cut down cost. Okay. So we invested into this business in the middle of 2020 when the COVID was at its peak. Okay. But the stock was really cheap. It was kind of sold down 50% then. Okay. But we said, no, this cost improvement is going to show up whenever revenues come back in terms of higher margins. So invested into them. And now the stock has gone up like 4 or 5 times since we invested into it.
I see. So that's one beauty of the actively managed fund as well, that you can go for very cheaply valued stocks when everything is going up. So because why I asked this question is because Japanese investors start with index funds at first point. So most people first invest in Nifty 50 type of index fund at first point, and then they will look for the actively managed fund at next step. So I wanted to ask you maybe what you think about the good part or the beauty of the actively managed funds in Indian equity market.
Yeah. So to answer the question, yes, the active approach makes a lot of sense in India. Why that is the case is, one, there are these sets of opportunities which are outside the benchmark itself. like Make My Trip is not even listed in India. It's only listed in the American Nasdaq exchange. Okay, so the only way to access such opportunity is to be active and to be willing to go outside India in order to find such listed opportunities which are of Indian businesses, right? So that is one. Second, what happens is that Indian markets, there are many high quality companies out there across sectors, but often the quality is well discovered. It is often well priced. And therefore, what you have to do, our recipe for investment in India is, okay, look for quality companies, wait for the right price, and then whenever that happens, invest in a big way. Okay. But to wait for that, obviously you have to be active investor. Okay. Because then only if there is a temporary disruption in their business, like what happened with Make My Trip during COVID, then you can buy stocks on the cheap and you can actually buy much more than what the index weight would suggest to you. Okay. So that opportunity is only available to active investors. Second factor is also that many times the large caps and mid caps behave very differently in India. So sometimes large caps go up, sometimes mid caps go up. Like last year, for example, large caps went up about 20%, mid caps went up 50%. Okay. Now that was great for people who were invested in mid caps earlier, but sitting now, the mid caps have already gone up so much and they're trading at a huge premium. What's the right choice today? Maybe it is the large cap. Okay. So then again, active investment can make those decisions in terms of asset allocation. Okay. Do I want to be in large caps? Do I want to be in mid caps? Okay. Do I want to be in benchmark stocks or do I want to be off benchmark stocks? So I think therefore active investment, obviously it has to be done prudently. So it has to be done thoughtfully by somebody who understands India market properly. And then it can actually give you much better rewards than a passive investment would.
Thank you. That helps me a lot. So Make My Trip is one a good example.
Yes.
Maybe.
Yeah.
As a part. Okay. Thank you. So maybe we can go back to more sectors like the healthcare.
Yeah. So the one interesting story is about the healthcare sector in India. This has been a consistent growth story. Now, the thing to understand about the Indian healthcare setup, and which might be very different from developed countries, is that a lot of the spending happens from out of the pocket. So people spending their own money to buy medicines, spending their own money to get healthcare in a hospital type of a treatment. Okay, why that happens is because one, insurance coverage is low, the government facilities are not great. Okay, and that's why the most of the spending has to be done from your own pocket, and therefore the decision maker is the patient themselves, and therefore they care a lot about the brand name, they care a lot about the quality of the care that they are getting, and therein the high quality companies can actually score well because they are the ones who are able to instill that trust in people's minds that yes, we are the ones having the best medicines or the best care of the hospitals. Okay. The second thing to understand is that it's a very fragmented market still. Like only 2% of hospital beds in India are owned by any of the chain hospitals. Okay, so the rest is all fragmented out there, which gives you a sense of how much consolidation opportunity is there for these chain hospitals as they kind of grow and expand, and they're obviously more efficient than the standalone hospitals. So they can consolidate them and improve their profitability. And that is what we are seeing in this space. Okay. The second chart shows you the opportunity on the medicine side of things. Okay. So India, the population is young, but the life expectancy is rising. Okay. So there are more and more older people as well. Okay. And all that means is that there is more disease burden too. So India is already considered the diabetes capital of the world. Okay. Which is not a great news to share, but that is the fact. Okay. All that means is that there are companies who can take advantage of that opportunity. Okay. So one such example we have in the portfolio is Torrent Pharma. Now the beauty of Torrent Pharma is they are focused on the chronic medicines. So these are medicines that you would use for long-term ailments like diabetes, like cardiovascular, like cancer, where you need long-term treatments. Okay. And these are the medicines which require where you have long period of the customer engagement as well, and therefore they give you higher margins too. So this company makes 30% margins in their business, okay, by focusing upon chronic medicines. The other great thing about this company is they're great capital allocators. Okay, so they made 3 acquisitions in the last 10 years, all of smaller brands. And what they do is they buy these brands and then they put it through their larger distribution channel. And that's how they scale them up massively. So all the acquisitions have turned out very well for them. Okay. So you get a mix of very high quality core business focused on chronic medicines. And then you get this extra bonus from the acquisitions that they are able to create value from. And that is how you see in this chart on the right, they have really multiplied their revenues and profits over the last 10, 12 years. And we have been investors in this company for the last 12 years now. Our initial investment has gone up like 10 times in that. Okay, so this is the kind of compounding opportunity that you can get on the healthcare side of things in India.
So are there many other companies is the industry becoming competitive in this area as well?
Okay, so the competition, the way it is a very fragmented industry, both on the hospitals as well as the medicine side of things. Hospital, I already mentioned, like only 2% of beds are with chain hospitals. On the medicine side, it is more consolidated, but it's like the largest company only has about 10% market share. Okay, and there are like maybe about 500 medicine companies in India. So, which gives you another way to think that there's again a big consolidation opportunity for these larger players to keep on acquiring these smaller players and become bigger and bigger in that process, which gives them bigger scale, bigger synergies to kind of take their profitability up.
Okay, thank you.
Yeah. So the other theme, very interesting one, is the IT services side. Okay, now this is playing on the demographic advantage which India has got. Okay, so the advantage India has got is that it is producing a large number of science and technology graduates, the largest number in the world in terms of English-speaking science technology graduates. Okay, I mean the only place where you have a little bit more maybe is China, but the difference is obviously the language barrier. Okay, and why that is important is because it is more of an outsourcing industry. So the Indian companies are taking this resource pool. Okay, these are engineers who are earning Indian wages and therefore they are low-cost resource pool. And they're using them to serve global enterprises for their technology transitions. Now, why that is needed? Essentially, if you were to kind of go back and look at how technology has evolved over time, I mean, if you go back like at the beginning of this century, we had the Y2K problem. Okay, all the enterprises needed to shift their systems from a year which had 2 digits to a year which had 4 digits. Okay, that was a big problem then. And the Indian engineers came in handy to do that work maybe more manual basis. But after that, the quality of work kept on growing. So from that, then we went on to ERP implementation in companies, then maybe Oracle databases, then Salesforce, then cloud, and now we are talking about AI. Okay. So all of that has been a big evolution curve for the enterprises to go through. And in that, the Indian IT services companies have really been holding their hand to help them integrate these newer and newer technologies into their systems. And that is where Indian companies are taking advantage of the demographic support that they have. Okay, so these companies have become really big. It's like the largest IT service company in India has 600,000 employees. Okay, it's huge and still growing at roughly 8 to 10% every year. Okay, so one interesting company that we have in the portfolio, it is called HCL Technologies. Okay, now the amazing thing about this company is that they have been able to really innovate themselves consistently. So while all these technologies have shifted, client needs have also shifted. They have been able to skill their employees in a different way so that they're able to cater to clients' demands for tomorrow. Okay, and that's how this company, which was about a $2 billion revenue company 10 years back, has become $10 billion. So it has multiplied 5 times in the last 10 years. And it has not sacrificed on margins. It is still generating 30% returns on its capital through that journey. Okay. And it is generating a lot of cash flows. So distributing 80% of its profits as dividends. Okay. So you get amazing combination of high growth, high returns, and high dividends. Okay. And these are the types of opportunities that you see in the IT services side of the business.
You mentioned earlier a little bit about the generative AI area. Are there any specific companies in India that's performing or playing a very important role in this area, cooperating with other companies, perhaps in the US or globally?
Okay, so it is still early days. So what is happening globally is that the enterprises are still having generative AI as more as pilot projects for now, right? And therefore they're experimenting in terms of how they can maybe become more efficient by using generative AI. So the Indian companies, especially in the IT services sector, they're helping them run those pilots for now. Okay, so these are very small assignments. I mean, these are multi-billion-dollar companies. And for them, these assignments would be worth maybe a few $1 million each. So it's very small, but they're all investing behind that capability. Okay. So they're all training their engineers to become AI capable. Okay. So that they can address those needs, because those needs are obviously going to grow a lot in the next few years. So again, this would be the IT services companies who would be skilling their employees so that whenever enterprises need that capability, they are out there and ready. Okay. So this is this obviously a big wave which is going to happen. Timing of that is a bit uncertain. The scale of that is a bit uncertain. But these companies would be the ones. I mean, having seen the way they have transited across different technology waves, I'm sure they will be able to do well even in this wave which is coming to us.
I see. Thank you. Okay, so maybe we can go over some questions as well as, or maybe can you briefly explain us about the current portfolio of your fund, the Indian equity fund?
Okay, so the way the portfolio is constructed, I mean, we are really focused upon finding good quality compounding ideas in India, because we believe that India really gives you that wealth creation opportunity today.
Right.
So there's no point looking at some cyclical ideas which will go up a bit and then you need to kind of figure out the next idea. It's better to invest in things like Torrent Pharma or HCL Technologies. I mean, these are the ideas which you can kind of run with for the next 10, 20 years, right? And therefore, our focus is mostly on these sectors that I highlighted to you, which is financial services, IT services, healthcare, and the internet economy, because these are really providing you with that great runway of growth. Okay. So if you were to look at our portfolio today, it is actually overweight on these sectors today. Okay. While it is underweight on the other sectors. So the underweight sectors would be energy, materials, utilities. So these are sectors traditionally which are cyclical, sectors making lower returns on equity, generally poorly governed companies, generally highly regulated as well. Government keeps on interfering in those sectors. So that's something that we try to avoid. And we would rather be in companies which can kind of determine their own destiny and who have quality managements, who are making great returns on equity, who are distributing profits as dividends to shareholders. So all of that puts us in more on this basket rather than the other.
I see. Thank you. That's very straightforward, I guess.
Yes.
Yes, thank you. Also, I wanted to ask you some questions about the election that's coming up, the national election in India. And so this also is frequently asked question nowadays about India. Can you give us your thoughts or your views on the election that's coming up?
Sure. So the elections are supposed to be conducted starting this month itself, and the results will be out in June. So it is pretty much immediate thing.
Right.
Okay. Now, all the projections that we have seen are pointing that Mr. Modi's party, BJP, would be coming back into power again and with a very good, clean majority. All that means is that there will be a good continuation of all the policy making agenda that we have seen in the last 10 years. So, Mr. Modi came to power in 2014. He won the elections again in 2019. And it seems very likely that 2024 also he will be the next prime minister. So, it will be his third term again. What you've seen happening under him is that there is a very progressive policy making that has happened in India. He has done a lot of reforms. He has cleaned up the system, increased ease of doing business, reduced corruption. He has brought digital agenda to the fore. He's put a lot of effort on in terms of improving governance of the country. And he's also now incentivizing more and more capital investment into the country through programs like Make in India. So I think if he wins another term, which is very likely, then that agenda will get further momentum ahead. So the next 5 years could actually be looking very exciting if he were to return to power.
I see. So will that give a very positive effect on the 4 sectors or 4 pillars that you mentioned as well?
Yeah, surely. Yeah. So, I mean, obviously all of them are linked to overall Indian economy kind of doing well. So yes, the growth prospects today are looking very nice. Indian economy is growing at roughly 7% this year. Maybe it will remain in that growth path of about 6 to 7% GDP growth every year. And yes, the positive policy push that we are seeing today, if that continues, obviously that will give impetus to all these growth sectors as well, whether it is financials or healthcare or consumer internet or IT services.
Okay, thank you very much. And also I have several questions from our customers about the popularity of the Indian equity, as you mentioned earlier. Is it also, are the Indian equity also popular both in India and also outside of India as well? Do you see any?
Okay, so Indian equities are certainly very popular in India. The simple obvious reason for that is people have made a lot of returns. Last 8 years, every year, local currency returns have been positive. Okay, so it has been a one long bull market in India, and obviously that attracts the retail investors to their own home market. Okay, outside India, if you have to look at, certainly there is great interest coming from Japan. So the Japanese investors have really understood and appreciated the Indian equity story much faster and much better. Okay, but we also see investors now warming up in other countries as well. So whether it is Europe or UK or US, investors are warming up to this Indian equity story. And also there is a bit of this kind of wearing off fascination from the Chinese equities story, which is also leading people to consider, okay, what is the next growth story out there? And therein India kind of stands out.
Yes, it seems to me that Japanese investors are interested in India simply one because of the BRICS boom that happened 20 years ago. Japanese investors were really into that area as well, the BRICS. So nowadays, Japanese people are worried about what will happen to the emerging market countries next 10, 20 years. Will India replace China as a manufacturer of the world or anything? But simply, Japanese investors are really optimistic about the Indian equity market, not just the equity market, but also India as a country.
No, which is very exciting to see. I mean, see, obviously, emerging markets, so we try to club them all into one basket. They're all very, very different from each other. Okay, it is just a very, I would say, convenient terminology to put many different types of markets into one bucket. Okay, but they all behave very differently. If you have to look at even the history of the emerging markets, very few of them are able to actually perform well. Okay, most of them underperform. So it can be, I mean, as we say, emerging markets can be a gold mine in some cases, but they're often a landmine as well. Okay, so therefore it's very important to pick and choose which emerging market you're going after. Okay, because that is what will determine the returns that you'll make in future. Okay, but we think that India is actually looking more like a gold mine rather than a landmine for now. Okay, and I think the Japanese investors have really understood and appreciated that very well, maybe because of the historical connections with India, that they're able to kind of understand that more than other investors. But certainly this is, we believe this is the right time for them to be looking in investing into India.
Oh, thank you. That'll help our customers a lot too. Can you give a little bit of a message to our customers or someone who's watching this video and maybe thinking about investing in India? Maybe a short message can help them. So
okay, sure. Yeah, so my message would be, yes, India is a very exciting story. As I said earlier, this is probably once in a lifetime opportunity for you to create wealth for not just 1 or 2 years, but for the next couple of decades out there. So please consider it strongly. Think about it, why it makes sense. If you have any questions, obviously you can reach out back to you, maybe.
Yes.
Yeah. But yeah, and the way to invest in India is to really think long term. Maybe the markets won't do well next year. I don't know. Okay. But the way to think is that in the next 10, 20 years, which is the economy which is going to do well? Where do you see corporates making high returns on equity? Because that is what will determine your returns from the equities that you invest into. So please consider India in that light, and then you will be all right. Thank you.
Well, thank you very much. Thank you very much for your time today. We will come back for sure with some other questions maybe next time.
Sure.
As well. Thank you very much.
Thank you. It has been a pleasure.
Thank you. 皆さんいかがでしたでしょうか？インドの株式市場について、そして今のインドの状況について理解も深まったのではないかと思います。お話、たっぷり、プラシャントさんにも伺ってまいりましたけれども、やはり長期での投資が大切ということをお分かりいただけたと思います。まずは積み立て投資枠でコツコツと積み立てを始めていただくということでも、結構ですし、もちろん成長投資枠を使ってですね、新興国にしっかりポートフォリオを組み込んで投資をするといったような方法も取れると思いますので、ぜひご検討ください。本日はご視聴いただきありがとうございました。
ありがとう。